Alright everyone, Cowboy Trades here, back with another update on Bitcoin. So, Bitcoin's currently free falling. The trade that we mentioned in our previous video is exploding into the profits. Let's talk about all this and more. We're going to start off a little bit differently. We're going to go on to the lower time frames as we're going to be talking about our trade, and we're going to work our way up. Lower time frames, and as we zoom out, we're going to come on to these higher time frame moves. Now, this is not going to be the main video of today, so if you're wondering why it's a little bit shorter or a little bit more a cappella off the top of my head, I've got a very busy schedule today. I've got some business to take care of roundabout when the CPI report comes out, so I do recommend that you come and follow me over on my Twitter. I won't be making a video within, a couple of hours of the CPI report, but I will be posting the CPI report and all of my thoughts on it over on Twitter, so be sure to come and follow me over on Twitter. I talked about the PPI yesterday just before we nuke, so come and follow me at 618_cowboy. Let's talk about this. So starting off on the 1 hourly time frame, where are we? Well, like I said, in the previous video, Bitcoin Trade Now, we talked about the short that I was actively entering from the 19,300 region. Now, if we zoom out, I also gave you a few other targets that if we did push up to, I would have been adding to my shorts. As you can see, really it was 19.3 and done. We completely started the landslide from there. We bounced back, and we basically never returned to this 19,300 region. So you could have been basically using any leverage you want and you wouldn't have been wiped out from this. On the absolute peak of this trade, we went down almost 4%. So like we said, on this 10x leverage trade, this was almost 40% in the profits. As of the time of recording, we're about 2.7% down, which obviously, once again, 10x leverage is about a 27% profit. So congratulations to the Cowboy family who did join me on this trade. Now, I am going to be incorporating a trailing stop loss at this point. I'm going to talk more about why I'm very conservative with taking profits on these trades later on in the video. Some of you who are veterans of the channel might know this story already, but nonetheless, whenever I do have these successful trades that come into 20, 30, 40% in the profit, there is absolutely no reason that even in the worst case scenario, you shouldn't be walking away with less than a 10% profit. So what I'm going to be doing now is I'm going to be incorporating a stop loss at the 19,100 region. I personally don't think we come up to this region, but if we do, we're going to be stopped out in a 10% profit. If we do come up to this region and then we get a very bearish CPI report, which once again I will talk about over on my Twitter before I do have time to post over on YouTube, then it might be a good opportunity if we do come back up to this 19,000 to start reshorting again. I will keep you updated on that, but let's talk about the trade. So trades in profit, we talked about the stop loss. At this moment in time, I do see further continuation. There is a lot of volume coming in on the lower time frames. If we start off on the 1 hourly, you can see this volume is very, very worrying. Well, it's worrying if you're a bull. Where is my price target for this trade? Once again, all the way down here at 17,300. Now we've incorporated the stop loss. Worst case scenario, we're stopped out in a 10% profit. Best case scenario, if we do come all the way down to this 17,300 region, this is going to be a 10% move on a 10x leverage. This is more than a 2x return. As you can see on the lower time frames, quite recently we came into the EMA ribbons, had a reversion to the mean. We started breaking down. When we look at our VPVR, you can see we came up into this area of volume and now we are slipping down to lower price targets. I definitely see further continuation in tailing. I'm going to talk more about this specific breakdown from this trend line in another chart in a second, but let's move on from here and talk about the daily oscillators. As you can see, we mentioned this in the previous video, but one of the reasons why we were shorting is the oscillators were breaking down in advance. Now, if we look at the RSI, I'm not the biggest fan of the RSI, I prefer the MFI, but I do have that in another chart a little bit later on. You can see we've run into resistance, we've started to break down. If we look at the MACD, you can see we return to the heartline. Histogram's turning bearish, we're starting to flip bearish and turn down. On the squeeze momentum indicator, like we highlighted in our previous video, we were starting to tick into this dark green. I'm not going to over explain myself. We talked about this in the last video. This was a great place to short when the squeeze momentum indicator started to flip bearish. Now, this chart is basically this chart over here. On the daily time frame, you can see this is the support flip resistance that I want to talk about. You can see boom, touch point, boom, touch point, boom, touch point. We broke beneath it. We came back up and retested it yesterday, and now we are absolutely free falling. So once again, this is another reason why personally at this moment in time, I am still targeting the 17,300 region. Honestly, this is very simple TA. As you can see, ran into resistance, ran into resistance, ran into resistance. This was the support and we've broken beneath it. It really is as simple as that. It does look like we're going to be going down to the lower price targets like we've been predicting. Over on Twitter and on YouTube as well, I talked about how the daily time frame, these daily EMA ribbons look like they want to boot the price action to the downside. And, you know, this is very similar to this. You can see in the lower time frames, we've got this support flip resistance that's breaking down. When we do zoom out, bear in mind, this is still the daily, but we're much more zoomed out. You can see the lows down here, 17,600. You can see we're falling from these VPVR regions around about 19,000. There's really no support down from here. It's going to get very, very volatile if Bitcoin starts continuing to push beneath 19,000. Especially if we start putting in a succession of daily candle body closes beneath the 19,000 region, it is going to be curtains. Now, in the higher time frames, there is an argument to be made that there could be a short down to the 1.236. This is also a price target that I mentioned, 15,800. Personally, if I was shorting to this level, it would be with a lower leverage and I would be incorporating a trailing stop loss. For right now, the only trade that I'm in, to keep it all simple, is this one that we mentioned in the previous video, which, as of the time of recording, once again is around about 28% in profit, and worst case scenario, we're walking away with a 10% profit. I'll talk more about that in a little bit. If we come over to the weekly time frame, this is a very nasty signal. You can see the stock RSI is really starting to turn down, and just like we highlighted in our previous video, sometimes you have these double tops on the stock RSI, and it is basically never a good sign. Let's clear it up very, very quickly. Like I said, I'm rushing through these a little bit because I have a busy schedule today. I'm going to talk more about everything I see a little bit later on today, but if you kind of look at the stock RSI, I've mentioned before how this doesn't work when you're in a parabolic run to the upside, but bar that, when you've got this choppy price action, it is a very useful indicator. So you can see in the chop here, you know, it really tells you to sell at great times, and it tells you to get back in when the bottoms are in for another run up. You can see quite recently, you know, this was a great shorting this was a great shorting position. This was a great shorting position right here. This was a great shorting position right here. This was a great shorting position right here. We're currently in this shorting position. So what you can see from here is if you were shorting from when the stock RSI really started to flip bearish, we're only down, you know, 5%, and the stock RSI has a long way to go down. So, like I said, really no need to overcomplicate things. It does look like we're going to start parabolically sliding to the downside very soon. On the weekly time frame, not a lot of momentum to be mentioned on the squeeze momentum indicator. Like I said, this is a very slow moving indicator. It needs a lot of momentum to push it up, down. And as you can see, you know, if we clear up the chart once again, we've been trading at the same price for a while. So I'm personally not using the squeeze mom on the higher time frames. But as you can see, not a lot to report here, very flat. MFI as well, very similar story that we had over on the RSI. Now, can you connect it from here? I believe you can. So there we go. This would be like a line of best fit, but what you can see in general is that volume is decreasing. Every time volume starts to rally up, you know, the markets get over exuberant, retail wants to put all of their savings into the markets. The MFI jumps up very quickly because, like we've mentioned before, the MFI, I find it a lot more useful than the RSI. It is basically known as the volume weighted RSI because it not only calculates the same way as the RSI, but it takes into account the volume in the markets, and subsequently you can get these overextension signals very, very easily. Now, on the MFI, we're turning down on the higher time frame. So all in all, you know, looking at our oscillators, they all paint a very similar picture. It looks like we should be getting ready for that capitulation on the higher time frames. Like we said, 20,000, which was also this point of control, Bitcoin's previous all-time high. We are landsliding beneath it. We previously talked about this head and shoulders pattern. Yes, this is now breaking down to the downside. The price target is absolutely ridiculous, so I'm not even going to mention it because I don't think we're going to be coming into play for that. I personally, like I've been saying for months now, have been targeting 16 to 14,000. Those are the levels that I really care about. And you can also see on the weekly time frame, the candle body close equivalent of Bitcoin's previous all-time high in 2017 is at 18,850 approximately. And what you can see right now is we've broken beneath it and we're retesting not Bitcoin's previous all-time high, but Bitcoin's previous all-time high in 2017 for the candle body close. So it's really not looking good, my friends. Like I said today, or at least in this episode, just a very, very quick update to let you know my thoughts on the markets. Once again, I will be posting the CPI results over on my Twitter. This is not the main video for today. Like I said, I've got a very busy schedule, but later on in the day, I'm going to give you a further update and we're going to dive into some more charts, a little bit more in depth. So watch out for that on my YouTube. Also, like I said, some things that I'm going to be talking about are the Bitcoin dominance, which is now finally having a push up. This is definitely not good for altcoins. Now, let's wrap up this video on this trade. So you might be wondering, if I'm so confident in this trade going down to 17,300, why am I incorporating a trailing stop loss? And worst case scenario, why would I be walking away with a 10% profit? Well, let me talk about my trading experience. Now, I've got a background in economics, so I've been well versed in the economy well before I got into crypto in 2017. I was poking around in crypto a little bit before that, but nothing too major. Before then, for years before then, I was trading the stock market, you know, currency pairs, US 30, precious metals. Now, I am no genius. I'm no, crystal ball owner. I have just made mistakes, and I've made these mistakes 5, 6, 7 years ago, and I'm very open about them. Once again, I'm no genius. I don't have a crystal ball. I'm not going to get everything 100% right, but what I do know is that I have made mistakes years and years ago, 5, 6, 7 years ago. I made these common mistakes like having a trade explode into 40% profit and then not including a stop loss in the profit. So like I said, back in the day, I would have trades that would be 100%, 200% in the profit. And my stop loss would be a liquidation level to wipe out my entire portfolio. That is not the smart way to go about these trades. You always want to make sure that if you have got a successful trade, you are always walking away with profits. Like I said, I'm no genius. I have made these mistakes before, which is why I'm trying to help you. This is why my channel exists, to help people that are maybe newer to these markets. This might be your first cycle. This might be your second cycle. I can guarantee that I've made more mistakes than you because I've been here longer. And with these mistakes, I've learned from them, I've bettered from them, I've improved my analysis from them, and I can help you talk about these mistakes very openly. Like I said, I wasn't the best trader in 2017, 2016, 2015, but what I did do is I put a lot of time and effort into learning these markets, and eventually it snapped. I'm now a good trader. It's not, I'm not showing off or anything, but I think you can look at my analysis, you can look at what we've been talking about for months and months and months, and you can see everything we've been talking about is dead accurate. This is because we remove our emotions from the picture, and once again, if you've got a trade that's exploding into 40% profit, there is absolutely no reason why you shouldn't be walking away with any profit whatsoever. So once again, congratulations to all the cowboys who did get in this trade, round about 20-30% in the profit, more over to 30% right now. But once again, I am incorporating that trailing stop loss right on that. Let's see. I'm going to incorporate it on the second short-term moving average, 19,150, which would entail approximately about 8 to 9% profit if you are liquidated from this trade, which I don't think will happen. But for now, my friends, that's all I've got. I will be updating you later, so be sure to follow me over on Twitter. I'll be talking about all the news events, the Fed's policy, more charts like the Bitcoin dominance, and we'll be diving in with a little bit more time and thought. Like I said, very busy schedule today, but I did want to get this out and let you know my thoughts and the update for the Bitcoin trade. So for now, cowboys, that's all I've got. See you over on Twitter. Follow me at 618_cowboy. I'll be posting the CPI very, very soon. See you soon. Cowboy out. Peace.